Okay.
Hello, my name is Mutiwal Hassan, Client Service Authority.
All right. I'm Samuel Akotupe. I'm also with the compliance unit of GhIE in our branch. Okay.
My name is Alexander Reynolds, Technical Manager, GhIE Takrady Abuati.
All right. The last time we had the first session, there were outstanding issues that needed to be addressed. So we invited our GhIE resource persons to come today to help us solve those issues. So for those of us online, you can send in your questions into the chat box, and then the tally that we had, we take one tally here, and then we take one question on yours. So we exhaust. I think here we have about 15 questions here. So we'll take the first one from in-house, and then take yours next. So we can begin now.
Excuse me, there have been a few notes on the
so
chat.
We have, based on the responses we've gotten from us, we have structured our questions into 6 categories. The first one, we're going to talk about salaries, deductions, and adjustments. So the first question under this first topic is minimum salary for directors. So we are asking whether there is a legal basis for the GhIE's minimum salary requirement for company directors. And we also like to have clarity on the legality of this practice in the country. So I don't know which one of our panels, which one will take this question.
So let me take that so that I can set the ball rolling. So I'm going to look at legality or illegality of minimum salary requirements for directors of companies. I think this question is closely related to the legality or illegality of commissioners to adjust salaries of taxpayers for tax purposes. So to start with, if we want to determine the legal basis of the Commissioner General to set salary levels for directors of companies, we have to look at whether or not there is legal basis for the Commissioner General to assess taxpayers to tax. If the Commissioner General can raise assessment for taxpayers, then there will be legal basis for the Commissioner General to set some level of salaries for directors. If we look at the Revenue Administration Act, Section 37, 38, 39, together with Section 122 and 132, subsection 2 of the Income Tax Act, all talks about the power of the Commissioner General to assess taxpayers to tax. Currently, we are basically under a self-assessment regime. So when the year starts, depending on whether or not a taxpayer is an individual or an entity, the taxpayer has up to the end of the first quarter to do self-assessment for the Commissioner General. If you observe carefully, taxpayers who are already in our system, Commissioner General do not give assessment to taxpayers until after the end of the first quarter. So it's giving opportunity to us to assess ourselves to tax. So if you go to your portal and you put in an estimate that this is how much I have to pay as tax as a director of a company for this particular year of assessment, Commissioner General will not assess you. But what happens is that when the first quarter ends and you have not assessed yourself, then the Commissioner General will proceed to raise an assessment for you. When you look at Section 37, Commissioner General has been given a discretion to use his best judgment and information reasonable available to him to raise an assessment or assessments for such payers. So based on this, if you fail to assess yourself, Commissioner General will assess you. But let's look at it, minimum levels. I don't think that there is a minimum level of salaries for all directors of all companies in Ghana. It varies. If you fail to assess yourself, or if you decide not to assess yourself to tax, and Commissioner General is going to assess you, Commissioner General is going to use information reasonably available to him and his best judgment in assessing you. And when the Commissioner General raises an assessment on you as a director of a company, you have some time to either accept it or you can object to the assessment. If you look at our laws, you have up to 30 days. If an assessment is raised on you and you think that the assessment is not reasonable, you object to it in writing, stating clearly the reasons why you have objected to the assessment. And indeed, when you object, you will be required to pay 30% of that tax. Then the Commissioner General can proceed to examine it to determine the objection that you have raised. Now, going back to the self-assessment, when you assess yourself, you have the opportunity to continue to even revise it. You can have revised self-assessment throughout the year. The reason is that when the year ends,
you know, I'm doing the
because what you are doing at the beginning are just estimates. Because the government needs revenue to run the machinery of the state. So the machinery of the state cannot wait
So I asked
until
about
the
the
year
exhibit.
ends, then
That
you
was
file
the
your
unless
return
I can.
for us to determine your true tax. So you are giving estimates. The year ends, you file your returns, then there will be a comparison between your returns that you filed and estimates that you did. This is because there is a provision in the Revenue Administration Act, Section 70, for paying interest on underestimating tax payable. So you can assess yourself. But if you assess yourself such that when the year ends and you file your returns, and we look at the declaration that you have made in your returns, and it is less than 90% of what you did as estimates, there will be interest on the difference that we will do for you. Coming on to adjustment, there are situations where the Commissioner General may adjust the assessment that you do, even if it is provisional. Because there are some companies who are on some special dispensations. And those dispensations are discretionary powers given to the Commissioner General. And as a result, he has set up some guidelines as to what to do to be put in those dispensations. An example is withholding exemption. If you are an entity and you decide that you are suffering so much withholdings, therefore you do not want the Commissioner General to withhold taxes from you, the Commissioner General has been given a discretionary power under Section 116, subsection 5C, to grant withholding taxes exemptions to taxpayers who have shown good cause. So when you write to him, he has a criteria, and among it, he says that if you want withholding exemption, then your directors must be on a salary of at least 10,000 a month. This 10,000 a month requirement is not for every company. It's for companies who want withholding exemptions. When the year ends and you submit your returns are also going to be examined. And when they are examined, Commissioner General can adjust whatever you declare there, because he's going to examine all that you have put in there. So there can be adjustment. But as to whether or not there is a minimum level for all companies, there is no minimum level for all companies. It varies. And there's legal basis for Commissioner General to set some levels for some companies.
So I think we still not receive any question from our online guests. So we'll move on to the second one. But if any of our members have any comments in that regard, we'll go to the next one. But I'm curious. I want to know, is there any internal regulations that allow or is still left at the discretion of the commissioner to decide as in which amounts within the threshold, whether lower or upper limit. Is there any specific guidelines internally?
Yes, so what happens is that when you fail to assess yourself, either an entity or an individual, then you have given the opportunity to the Commissioner General to assess you. And what happens is that Commissioner General is going to use information reasonably available to him about you. He can use the network method. He can use bank deposit method. He can use the taxpayer expenditure method. And based on this, estimates will be made. Remember that these are estimates, provisional assessments. Once you have not assessed yourself, information reasonable available to him is what he's going to use to raise an assessment on you. And that is the more reason why the law also gives you opportunity up to 30 days after the Commissioner General has served the assessment on you to either accept or object to it.
And I think that our tax system So these are issues, genuine issues that maybe needs to be addressed. When we get to the building tax too, I think I have a lot of questions. So can you take note of this? So we'd like to exhaust them. Probably his question might have been captured in the subsequent what? Now go back to the take notice of this. Now, we want to also know the commissioner's authority to adjust. Okay, I think you've dealt with that, and the framework, I think you've dealt with that. So we move on to the next one, waiver on interest and penalties. I think you can briefly touch on this before we move on to the next one.
All right.
So we are talking about, we want to know the specific conditions and the processes in obtaining a waiver of interest and penalties.
Thank you. So waiver of interest and penalties. There is for there to be waiver of interest and penalties, there is usually an amnesty that allows taxpayers to apply for waiver of interest and penalties. I think the last one we had was after the COVID-19 pandemic. So there was the Waiver of Penalty and Interest Act 2021 Act 1065, which was passed by Parliament for taxpayers to take opportunity of it to file all outstanding returns up to 31st December 2020 and pay the principals on them or make satisfactory arrangement with their offices to pay, and then apply to Commissioner General for waiver of the interest and penalties on them. For this one, there was a sunset. Taxpayers was given the period between 1st April 2021 to 30th September 2021 to file all these returns and put in their applications for waiver of interest and penalties. We received lots of applications to the extent that by the end of September, there were still more applications coming in. So Parliament in its wisdom amended this act and borrowed Act 1073 that extended the time from the 30th of September to 30th of June 2022. So that was the last time we have an amnesty for waiver of penalties and interest. So as we speak, there is no dispensation currently going on for waiver of interest and penalties. However, the Commissioner General has the power to always waive penalties because Section 65 of the Revenue Administration Act allows the Commissioner General to remit penalties of taxpayers when good cause. So at any particular point in time, the taxpayer who has penalties and have reasonable grounds can write to the Commissioner General and appeal for the penalties to be remitted. It's a discretion that is given to the Commissioner General, and it is to the effect that he waives the penalties wholly or in part when the taxpayer demonstrates good cause.
Can we mute everyone, please?
Okay. So currently, that is what exists. But the interest aspect, there's no rolling the glass down, and then market day you are rolling it down. Remit or waive interest. Taxes in general are only by the Commissioner General on grounds of impossibility of collection. If it becomes virtually impossible to collect, or if the administrative cost of collection will far outweigh pursuing the collection of that data. That is the condition under which tax can be remitted. But penalties can always be remitted. If you write to the Commissioner General and demonstrate good cost, Commissioner General can remit your penalties.
More questions here, but I think it's more when we get there. I'll just talk to
AG. The
yes, so the second part is on tax compliance.
Please, you are disturbing us. Like he jumped out of it. How deep is the void? Because I'm sure maybe they feel this for some way.
People are making noise.
Okay, so let me just take that one as well. So new startup registration requirements. In fact,
please, can the force everybody except the speaker?
If you are
last time I went to buy Kelewele at 4 Junction.
But they
still
when you fail to register when you are registrable.
It's nice, but
so new startups, either sole proprietors or entities, are required to register. And in registering, what is required for you to do, for you to be registered, if you are an entity, is to submit to the Commissioner General through the tax office closer to you. Because for registration, you may not know where your tax office is. So where your business is located, the office closer to you, you can submit your incorporation documents. In this case, an entity. You submit the incorporation document to the office. Then the office will give you some other documents to complete for you to be registered for tax purposes. For entities, you will be given what we call IT Form 05, where you supply some basic information on it. We also have the GhIE Form 0, which normally is required for you to give us a direction from our office or the office closer to you to where your business is located. So once this is done for entities, we will also require that you provide us information on your directors. And in fact, this information is very, very important because that is the basis on which we may decide whether or not to raise assessment and the level of the assessment. So we ask that you provide us with the profile, some short CVs of the directors of the entity. You also be required, we may also ask that directors should file their personal income tax returns for the previous year if they have not done that. because that will form a base. Some directors might already be directors of other entities or have other income that they were already filing returns. In that case, you provide us copies of those returns. And when you do this, you will be registered as an entity. For individuals, let me talk about individual before we come to the determination of the tax. For individuals, if you want to register to do business for tax purposes, as an individual, you may not require to do any registration. What will be required from you is your taxpayer identification number or your Ghana unique identification number. Unless otherwise, you have a trading name and you want that trading name reserved for you, that you may be required to do the registration of business name at the registrar of companies. Otherwise, if I'm Abdullah Yakubu and I want to do business as an individual called Abdullah Yakubu, what I need to register with the tax authority will just be my TIN or my Ghana card number. Then we'll register you. We'll interview you, find out more information about what we are doing, and we'll put in the system. So for individual name, that it is required that you and provide us information on that, we go ahead and register you. Then when that is done, if you are registering with us and it is within the first quarter of the year, for individuals, our January to 31st December, by the end of March. Entities, the base period may vary. It will be your accounting period. So if it is within the first quarter of your basis period, we may give you an opportunity to assess yourself after we have finished registering you. We'll ask you to tell us how much taxes that you think you can estimate you can pay for the year. Then you do that. And when you give us the estimates, you are going to be paying on quarterly basis. So you are not required to pay everything that you say you pay at a go. So if you are registering with us, say in January, and then you have informed us that as an individual, I think that the taxes I can pay this year is 2,000 Ghana cedis. Then this 2,000 Ghana cedis will be divided into 4. So it means that you're going to pay 500 cedis per quarter. If it is January, you can just complete your registration and go, because you have up to the end of the quarter to pay for that quarter. So the 500 that you are paying will be due by the end of March, because that's the end of that first quarter. And the next 500 will be the other quarter like that. For entities, they are also allowed to do the same self-assessment. But if you are registering with us after the first quarter, you may not have the opportunity to do self-assessment, because the self-assessment, the window will be closed. You cannot go onto your portal to assess yourself after first quarter. That is why Commissioner General did not assess any taxpayer until after the end of the first quarter. So when the first quarter ends and you come, maybe in June, July, to register your entity which has just been incorporated, we'll register you, we'll have a conversation with you, then we'll give you some estimate of taxes to pay for the last 2 quarters, because you are not starting from the beginning of the year. And whatever taxes that will be agreed between us will be for the remaining of the year, which will be paid on quarterly basis. So that is what it is about the the projections. The projections can either be from the taxpayer or from the Commissioner General. And when you do your own projections, you are even allowed, those of you who have access to the portals, you realize that you are allowed to revise it as many times as possible until 31st December that year. That is the only point at which you can no longer revise that assessment, because you would have ended the year and you have 4 months after the end of that year to now submit your final returns, which will indicate your true tax position. So all these estimates, whether coming from you or coming from the Commissioner General, particularly if it's coming from the Commissioner General, when you file your returns, whatever you put on the return will supersede whatever estimates that were put there by the Commissioner General. So the moment you go onto your portal and submit your final returns, whatever was on your system with us will be displaced and your return will take over. That is what happens when you register. So for registrations, there may be some benefits that you get. depending on what you are doing, depending on your age, etc. So for those who are registering for the first time, we have some temporal concessions, depending on the area you are going into. There are also some exemptions, like the young entrepreneurs exemption. Depending on the area you are going and your age, you may take opportunity of some of these benefits that are there in the app for you.
Okay, so there is a question that I'd like us to implement what you just explained. So engineer for GhIE-GRA is asking, say her startup is 100,000, and then based on the amount, the self-assessment, she's supposed to pay 30% of that 100,000, and then the first quarter is paid. By the end of the year, he's not done any work. Can you explain what happens to her?
All right. So her startup is 100,000 and she's supposed to pay 30% of that.
Yes.
I don't understand that.
So he's saying that an assessment of 100,000 is given.
Okay. All right.
And then he's supposed to pay 30% after writing. 30% of the 100,000.
When he's objecting. Oh.
That's when she's objecting to the assessment.
Objecting to assessment.
The 30% only comes when you're objecting to an assessment given.
Exactly, yes. Yes.
So when you come to register, no registration officer will just give you an assessment in Baku. You will have to have conversation with him, up and front conversations, until you get to some stage. Because there are going to be estimates that are going to be done for you to be given that assessment. So I don't expect it that it will be so unreasonable. So if it were to be 100,000 that is given to you for a startup as your task to pay for a particular year of assessment, and then there's information available to the officer that you are capable of paying that, and you think that this is not reasonable for you, that is where you have to object in writing, and that is where you have to pay the 30%. So if you pay the 30% and the assessment is revised or is determined, and like she's saying, the year ends, you have that. Meanwhile, you paid 30% already. You will file your returns and tell Commissioner General that you didn't do anything, so you have no tax payable. The 30% that you had paid earlier will be a credit sitting down for you. It will be a credit. It will not go anywhere. It will be a credit, provided your returns have been determined and established that it is actually a credit. It actually didn't do anywhere. It will be a credit for you.
Okay. Any other questions?
No, excuse me. Let me link it up to the question that he asked. In all the, we are talking of return. Your powerful tool as a taxpayer is your return. It's your return that is going to speak for you at the office. So, for example, the question that he asked, last year was good, this year is what? If we file the appropriate rate to declare that zero income, there will be no tax for you to pay, my brother. In any case, let's say that you are hoping for some income. For that matter, you made some payment at the beginning and the year ends and you have not done. The same thing, just like my brother explained. That becomes a credit. It is up to you to prepare proper return and submit it. That is all.
All right, thank you so much.
You know, what you're saying is right, but in practical terms, it doesn't work. For instance, 2022, I do so. It's captured in my 2022 tax. Everything that is supposed to be paid is captured. Then the money is paid in 2024, which will reflect in my bank accounts, even though that has already accounted for in 2022. Now the money comes in 2024, and it comes out. You go and you tell them that this has already been taken care of by my previous returns. Why the money has come? This is not noise. It's practical problem.
Yeah, that's true.
This is the problem is, if they want the money has come,
Before you address that, the director would also like to give a brief comment.
Just to buttress what you think. I have a case standing right now, which is still existing. 2022, I did a job, and then I was supposed to be paid an amount of the value on that figure of the clients he paid only, let's say, figure 3 for that one. So when at the end of the year he didn't pay the rest, so the tax returns was based on the 3 that he paid. Then the next year he paid the rest, which was captured that time, also at that time. But then when he was issuing the withholding tax, that time was giving out the withholding tax, he lumped them and then backdated it to 2022. Now, there was an audit, and it came out that what I was told is that I have under-declared my taxes for 2022, and I have over-declared the 2023. Although, from my side, what he paid is what I declared the tax on. 2022, what he paid, I declared tax on it. 2023, what he paid, I declared tax on it. But from the GRA, once he has given me the withholding tax as a lump of the whole 10 and backdated in 2022, I was accused of under-declaring the 2022 and over-declaring the 2023. And it's a case currently sitting. It has not been resolved. So it's sort of addressing what you say.
Can I ask you a little bit of a question on that? The 10 cities or the 10,
yes,
was it due by the end of 2022?
Yes.
Had your services been completed and the 10 cities was due? Then you should have reported on 10 cities, not the 3 cities that a person paid.
I pay my taxes from what I have received.
No. Is it an entity or an individual? Good. An entity, you do your accounting is on accrual basis. So once the revenue is receivable,
It has not been received.
yes,
It's receivable.
exactly.
It's coming.
Yeah, securing
He
that.
has said everything.
You heard it from engineer, so maybe you believe it's coming from one of your own.
Yes.
The issue you're talking about, even this year, I'm facing the same challenge. My money was paid in November. And then
Which year?
that was I think 2023.
Okay.
And then the tax, they didn't pay the tax. They went and paid the tax. The 2024.
Yes.
March.
Yes, we have that one a lot. That one, yes.
This is that I declared here.
And particularly
When they are paying you, you know the year of assessment in which that job was undertaken. So if you had a contract in 2022 that was supposed to be paid within that year, all things being equal, and they paid in 2024, the one paying you, for example, if they are taking withholding tax, the agent would declare in the system when it's found that this agent will select the year of assessment in respect of that way. So the withholding agent would show 2022. If that was not done, it might be an error from the withholding agent, not. That's the problem. But it's always open that you can select the year. It's the year of assessment is open in the portal. So you select the year.
Don't mention it.
The client will issue the, if he's paying them, giving you the
holding certificate.
The holding
certificate.
The year is giving you, that's the year. Now, there's, now, if we are talking to withholding, I have a lot of issues there. I mean, because some of them, we are living the practical.
That's what we are. You want that resolved, so you are free to hear them.
My client is a government agency.
Yeah.
Now,
they do that a lot.
Now, I go to pick my payment pattern. It is indicated that they have deducted 5% income tax. You come and see tax collector. Then I tell you this. My client has indicated that it has collected 5%. You have deducted tax. I go to them. They are not able to give me the certificate. I know, as GhIE, you have the power to go to them and say, no, you have taken this money from this supplier or this. You're supposed to pay the money. Because sometimes in the days, I see that you advertise that the tax, the withholding tax that is deducted in the month is supposed to be paid before the 14th of the following month. It's mentioned to my tax. Supposed to go and announce the money on my behalf. Because if I go, I don't give me the. So government agency, so you are supposed to go and look who paid this. He has evidence that you have collected you have deducted the fact that give us the money. You give the contractor, he fight for that money. So at the end of the day, I have to go and look for money somewhere. It is not fair.
So can we take notice of that? So we rush.
Yeah, because what you are talking about is to a large extent true. And it's not a problem of the law, it's a problem of compliance. As we sit here, I have a number of cases like that in the office. Somebody worked for a ministry in 2022, declared everything in 2022, payments were done, taxes were withheld, but they were not paid. So he had filed and declared, and as we speak, he has more than 5 million Ghana cedis as a liability for 2022. They have now paid the taxes this year and credited the withholding to 2025. Oh. So it has been there.
Yeah, so what I'll conclude on this? Our online participants, one of them is curious to point out that he said he read somewhere that some newly registered entities are going to get a tax break for 3 years. How true is that related to our field of work, our profession, in terms of consultancy, in terms of construction?
Tax break for 3 years.
Tax break for 3 years. There's nothing like that.
There's nothing like that.
No.
So if there is something like that, maybe it is still in the making. It has not become law.
It's not official. It's not law. So we are not aware.
Because the only break I know for startup currently in our tax law is the young entrepreneurs exemption, which is 5 years. So if you are an entrepreneur and you are starting a business, and the law defines a young entrepreneur to be somebody 35 years or below. So if you are 35 or below and you are starting a business, and it has enumerated some sectors, tourism, waste disposal, agro-processing, ICT, if you are in these areas and you fall within the age brackets, you write to the Commissioner General and you are given exemption for 5 years. That is what is already in the Income Tax Act. But this 3 years break, I don't think.
Even with that, we need a certification from the National Youth Authority that you are a youth. So they have a report certificate to give you. Yes, you cannot get a document. So you come with a certificate from them, declare that this is a youth enterprise, and then you are exempt from paying either maybe it's income tax. It could be either direct or not, but if you have employees, that one you are not exempt from paying withholding tax. So employees,
an individual, and you qualify for that dispensation, you are exempt, you the individual, from the payment of income tax.
So in this case, it's individual.
No, even entity.
Company.
Company, the directors.
Yes.
So let's say you have 2 of your directors who are under 35, and one of them is 50 years or 45 years.
So who has a majority stake in the business?
Thank you very much.
Then
So
Maybe I'll speak a bit about but in my work, of price quotation. There are times I've spoken to a lot of GhIE, but they always think that engineers are various ways of we pushing out. Mine is more price quotation. So what I do is I prepare my VAT and invest on, let's say, my letterhead, and I give it to the client. Now, when you are pushing me to give you VAT, I don't give you VAT. I want to give you VAT at the point when you are ready to pay me. Yes. You understand? So if it's, let's say it's 10, and the deal is such that you give me 60%, and I finish the rest of the report is 40%. I give you VAT investment 60%. So that I don't want to get any trade receivables in my books.
Yes, I get your point. To some extent, you are trying to plan your tax, but even in the law, it's not. There's what we call a tax point. And then, what is a tax point? The VAT that you are explaining. It says that when an invoice is issued, not necessarily a VAT invoice, or if it's a service, when the service is rendered, if it's a good, when it leaves the premises of you, the seller, or when the receiver receives it, or the earliest of these three, the tax point has been attained, and payment is due as soon as tax point is made. That's the law, not us.
I understand where you're coming because I know that once I issue an invoice, it means that I've discharged the service. I need to receive a revenue. Okay, but the point is that me giving you the evidence that I'm going to give you the job. That's the engineering practice.
So why then should it be pro forma?
No, because he will tell you, give me a quotation. You receive your quotation. Later, look, I got somebody else to do the job for me. That's what happened. Giving somebody an invoice.
Then when it happens that way, that in case you pay off part or who, there's something we call adjustment that is done through debit and credit notes. We can always revise that when it's done. It's revised.
Pay that money. They pay, if it's 60%, they will pay the withholding tax on that 60%.
There's if you look at our law 896, long-term contract, it depends on what your contract says. If your contract says it's going to run for 2 years, 3 years, so I'm not saying pay who. You pay your tax based on percentage of completion. Percentage of completion is what we are looking at, not the entire amount.
The tax law should really understand the mode that we operate. I can tell you, you sitting out there, you can tell me, Joe, I'm doing some trade, so can you do your check for me? You don't sign contract with me. But I've given you invoice. And you tell me, oh, okay, system was meant to have the bottom with the 40% number. Let's talk on that person about a component thing. That's how it works.
But maybe if you have a suggestion, you see that this is a very big institution. If you look at our VAT, when we started the 3% flat rate, if there's no literature on taxation, that you see something like a country running a 2-tier VAT system. If you are standard, you are standard. But because we have a particular situation in Ghana, we have a strong body like GhIE-GRA. They push and we had the 3-tier VAT, standard and flat rate.
Thank you.
So if you feel there is something peculiar to your industry, you will lobby the lawmakers to make what you want for you. We are only implementing agency. We implement the laws, but we don't make them.
Implementing this thing, I'm not sure GhIE, they call us that. Let's have this.
You always make proposal to Parliament. You can sponsor a bill. GhIE-GRA did that. Yes, so that this is what we want. We should be in the tax law. It's done. We only consult GRA for our input, and it's done. GhIE-GRA push and right now we have flat rates VAT.
At times, government projects not too much of a problem. I can tell you the government projects, I was part of it. Not even the agency doesn't want to see that you are rated as part of the invoice. But yet when they are paying you, they make sure that you have to pay back. So the idea is that then whatever when you are giving out your, as I said, mine is price quotation. They have to be putting these things on the individual item. Yet you are going to competition. You see, so and apart from that, the private clients, my brother, When I charge 20,000 cedis and I'm prepared about 21% as taxes in general, when they see, they'll tell them they don't want to pay. They'll give the job to somebody else. Hey, you don't talk to everybody. These are real issues. Not that we don't want to pay taxes, but it gives us out of getting job to do. Because the fact that the system is not, even though there are regulations, it's not too effective. So these are the problems. I think that probably, as you have said, we need to sit down and see how we can push this agenda and look at the engineer. It's a very peculiar environment that we have to look at.
So key takeaways, whatever reforms you want against the laws that are there, we should push for it. And key thing we've also picked out is they are saying if the contract is 100%, 30% is paid, still go ahead and pay your taxes on the 100. The 30, use all the 30 to pay the taxes on. That's the key takeaway. Yeah.
You say declare the 100, not pay. You may
Declare. You can
declare the 100. You may owe, but later you pay with interest. Declare. That's the key for you.
The last time now they came here, were asking. I think they plan doing something to make it a bit easier for that. A template for me, if I'm to even prepare an invoice, why don't I go to my portal and use the portal to prepare the invoice, okay? So that if the project is effective, you see. I think we discussed this. Mr. Jamal came here, about 2 years ago, right? Last year, we had this discussion. So I believe that we need to have that engagement.
Okay.
Yeah, so that's fine. Move on to the second point. We are so we are asking whether there are simplified systems for small businesses. Let's hear from one of the regular customers. Those of us online, are you following us? Are we audible enough?
Yes,
you are
but there's a question in the
clear.
inbox.
Loud and clear.
You are audible
Okay.
most
That's awesome.
of the time, but one voice goes up and down sometimes, and then others are disturbing. The host should be able to switch off everybody unless a hand is raised.
A more user-friendly one for small-scale consultants and sole proprietors. Do we have something like that?
Yes, we have something like that under modified taxation in the second schedule of Act 896, the Income Tax Act. But unfortunately, there are qualification criteria which in a way affects this institution, your members. It's in 3 categories. The first one we call the modified taxation based on installment. That one, your turnover, annual average turnover for 3 years, including the year of assessment, should be between 20,000 to 200,000. That one you pay tax on installment. We have 500, 45 cedis. Those you see like those on vehicles and shops, I see stickers, those are the one. The next category, it's if you look at the criteria, who qualifies in even the third one, he said your income must be exclusively from a Ghanaian source. That means you should not earn a foreign income. Your business should not be classified as a business that has a higher profit to turnover ratio. You should not be engaged in a profession. You should not be engaged in a profession. There are criteria, but the one that basically affects, even if you meet all, once you are professionals, you do not fall in that category. But with that, it's a simplified form of a way of assessing you, a simplified way of paying your taxes, also a simplified way of filing your returns. But you are barred from being put on that scheme by virtue of your profession. You must meet all those listed and the listed criteria. But once you are a professional, you are out, unfortunately. And you are a professional. So you do not fall under that category. You cannot put you on that. It's very unfortunate that you are not. Your profession disqualifies you from being there.
So what are we out?
Let's pray.
You are on standard assessment. That's the way out. Standard assessment, just like here, the current status quo. The status quo will remain.
So I think the third point, except we were looking at 6 points, right? So we're on the third point now. And then we've had a preliminary discussion on this. So let's pick out some of the areas that we are yet to touch. So, okay, we spoke about withholding on shared revenue. Now let's look at the second one, the practicality of withholding tax. Let's see the first one. Okay, so withholding on shared revenue. We need to understand the legal basis of withholding tax shared revenue among a group of consultants for a common project, especially when tax has already been withheld on the total sum paid to the group. This is a peculiar situation.
You don't want any ambiguity. You want to be clear.
Then work under my company's name. Because engineers or worker, yes. And then you pay us. When you pay us, you deducted the withholding tax. Okay. Now the money comes to me. I am not going to pay them as well, like stock consultants, but then we have all worked together. We have earned the money. We must now share the money, of which the withholding tax has been taken already. Now, when I'm going to give them their share of the revenue, I'm supposed to pick again withholding tax on whatever I give them.
I get it.
If I don't do that, it will be taken from me. Because when at the end of the year I'm filing my return, and then auditor sees that you pay somebody this amount of money. Where is the tax that we have? No, because the withholding tax has been taken already. So then I must pay for all that. So and if they have to pay somebody under them, they must also take the withholding tax again from me. So for the same money, for the same work, the taxes are 3, 4 times or so. That is what we are talking about.
Yeah. I get it. Yes.
In our field, example, we are going for a project. You have an architect, you have a structural engineer, you have an NDP, you have other allied professionals.
Yes.
So you all go in for that consultancy service, and there's always a lead one. So that's just to give you a background.
Yeah, I get it. See, when you are going for that contract, that's you explain. You have architects, you have MEP, all those. Which entity want or has a contract? Do you know? Which entity has contract? Lead one. For example, it's Mr. A, lead contractor. He wants a bid to execute a contract, but by virtue of the peculiarity of the job, he will not be able to execute it alone. He needs others on board. So he got them. So when that contract sum is being paid, it's paid to, say, Prince, because it's Prince Enterprise or Prince Limited that want the contract. So it is Prince that is only recognized as the executor of that contract. So it will be expected to be withholding tax. The agent will withhold it. So now you didn't go to execute that project alone. You had others on board, but unfortunately, they did not go in as one company, but with partnership. You went one alone. We see them as like employing them. He gave them a job. His company won the contract. He's executed, but he can't do it alone. It's like employing them to work for him. What Prince? The amount you suffered the withholding is limited to Prince Limited. That what he received constitute income to Prince. At the moment, others are unknown. But the moment there's a movement of funds, that movement constitutes an earning to whoever receives it. And the moment you earn, tax is due. No. Whatever you receive is a part payment of your tax liability. So Prince has paid is from the bulk one. Then he's paying other partners. Whatever they are receiving out of that payment, the withholding constitutes as part payment of their tax. After all, you already said pay is payment relative to what you earn on that job. So it's a part payment of your tax. It's not final payment. It will hit your ledger as amount received by this withholding. Yes. So whoever receives it, assuming you didn't go through as partners, he employed you. When you receive the money, he suffered withholding tax. When he's paying you all of your monthly tax, you will show POI. It's still employment. I'm doing it related to employment. So in both cases, tax. Good. Withholding is once.
Venture has multiple parties.
Yes.
And we assume that all the parties are paying their withholding.
Good. When you go to register, say partnership, luckily enough, in Ghana here, we don't do transparent type of taxation for partnership. We do transparent, not opaque. So if you go like say 6 of you are the partners on the Prince and Co, Prince and Associates, you earn that income, you register as partnership. So when they are paying you and they take the withholding, we will not go asking individual partners, this is your tax, pay this amount of withholding. No, it is one. But when you are sharing the profit, it becomes a profit you're earning. Your taxes will be limited only to the extent of your earning in that business. You are partners. So if you say, oh, this is the partnership registered, my stake to this business is say 30%. So my liability to that business in tax interest or tax will be 30. This has 5%. You pay only to the extent of your ownership. For your ownership will determine how much you earn.
So the joint venture is a temporary arrangement specific.
Yes. You recognize that.
Yes. There's an agreement between the 15 partners that there are 6 of us, we come together as a joint venture, we pay for it all. The payment is normally paid to the joint venture and an account for that so that you can have increase. But it's not any of the partners recruiting somebody.
Yes, when there's a joint venture, that's partnership. And that partnership must be incorporated. That's where you get legal existence. Yes, that's right. So
let me understand. Your joint venture, is it made up of entities or individuals?
It can be individuals.
Yeah, but normally this company might be doing it. Mine will be doing it. He's doing the entity. So let's say our entities come together for a specific contract.
Okay, so you are doing that contract for me. Yes. Who do I make an agreement with?
Okay, so that's what happens. What happens is that you are the client. You know you as a friend. Okay. Oni, can you get me these professionals to execute this job for me? Now he brings, the requested persons on board. Okay. They have done the work for you. Okay, you have to pay. Okay, now I'm going to as an cash or who do I give the money to?
So if the one some big point at the joint venture. So several companies will come together, sign an agreement at the joint venture, and the names of those companies sit in the contract. Okay. So it is paid to that joint venture. Okay. How they share it is not a client business. Okay. But he knows that company A, B, C, D have come together as a joint venture, and they bidded and they voted the contract. Okay. All dealings will be in the name of that joint venture. Okay. And the payments will be made in the name of the joint venture. We pay them.
In this case, the joint venture is not registered with GhIE. Not registered with GhIE. Good. So if it's not registered with GhIE withholding cannot come in. But when the joint venture pays to A company, which is a member of the joint, B company, which is a member of the, when you receive the income, you are expected to account for it.
So the client should not withhold.
You don't have even a tin. But if it's withholding, you have to use a tin.
As far as GhIE concerned, that joint venture does not exist.
Yes, does not exist. So it doesn't.
It does not exist. We don't know. We are not aware of it.
Because now, if you don't have a tin, you can't even.
We don't exist. We don't know you. GhIE doesn't know that you are.
We can only deal with you through your tin. If the tin is not there, there's no way we can hook onto you.
Let's quickly move to the next one. Practicality of withholding tax. Okay. On procured goods. How practical is it for a customer to withhold tax on a product purchased in a shop, remit it to the GRA, and then provide a withholding certificate to the seller. Like to discuss.
Okay.
Okay.
Please, we can't hear. Can you repeat?
And then I tell you, I'm paying the 7,000, but I'm taking 5%. The 3% I'm paying. The mechanics, my car breaks down. I call a mechanic. He comes to fix the car. The mechanic charges me 2,000. Then I tell the mechanic, the 2,000, I'm going to take 5%. Then I'm going to pay the company. And this thing I'm very serious about it. Yes. Anytime I get a call from GRA and they tell me we are coming to do
audit. That's really
I know this
come up.
And get me because thank you, man. Okay. But you can't do that. You know, when my namesake was talking, I am also up. When he was talking, he said, when collecting the tax is costly, comes too costly compared to the benefit. How people know this? People that pay a tax of that person, I don't know it. And because of this, so
Any quick comment on that?
Yes.
The question is, how do you pay? Is it to your company account? No, I don't know that. For what they said, they only deal with legal. Yes. So if you went to the workshop and they fix your car, the payment is it a company check or something or like
See, with withholding, an individual cannot withhold when he raises his business. So because what he is complaining because that amount is paying Kifuri or the mechanic, it's wants to see it as a necessary business expenditure. If you go as an individual, as Abdullah, you are not incorporated, you don't have a company, it will not be on you to account for that because the responsibility is so imposed on you as an individual. Just Abdullah, you cannot withhold, but be an entity.
My company has that.
So the guy is registered the company.
Yes, the name of the company.
When the company's car, you have to.
I don't talk about the iron rod. I won't talk him as an individual.
Okay.
I'm talking as my company going to buy that million horse.
For a contract. Okay.
So, I mean, the reference is
the company. Okay. But that's a responsibility on you that to do business with tax compliant people. Therefore, he knows that you must withhold, except he has a proof to show you that he is exempt from that. Because there are people who get exemption for withholding. You show your certificate. By this, I'm exempt from. So you are free to pay. You give a copy of that with the exemption certificate. When you are okay, this is the reason that I did not withhold. He's exempt. So we exempt people, we exempt the taxpayers. If you are well for a number of years, of complied, that's it. So when you write, you show a good call. Commissioner General will exempt you from withholding. So when you're doing business with me, you cannot withhold because I'll show you my exemption certificate.
So I think this is very important.
But if you want to do business with someone,
there are some questions also in the inbox.
Yes.
See, if you are talking about me, I have to vote. Let's say the person hasn't registered, I have to vote. If it is that easy, Why don't I give you the receipts as GRA? Okay, I prepare my account. I want to know this from this. You are a company as an individual or a company. You know it is possible for you to go and tell them that they should give you. I think that the best way is me. I give you the evidence that I bought this from this company. Now, how you get your tax? The sad aspect is that I cannot dodge the employee tax. But when my client is paying me, it is that at source. So I don't have any way of dodging that. But for me to go and tell somebody to pay that employee tax,
see, part of the how to collect our tax is the withholding. The national is not just collecting the money. We know that there are people in the system who may be doing this that will not know, or who may be doing will not declare the correct amount. So this gives us an indication. So normally you will say withholding, okay, from this Mr. X we did business with X and he has this. We check on our system. This person is not on our system. It's a lead. We use it to chase him. Ask him, come and account for your time because you're doing business to the extent that you suffered withholding from Mr. Abdullah Limited. So where is the remaining tax? It's a trigger.
You can imagine this number of companies. If every one of them is to bring their receipt to CRA,
so that
payment is the number of officers we need to employ to be able to do that kind of job. So that is why it is you who is dealing with them. And in any case, you have an option to deal with somebody who will accept your withholding, because some, like you said, have exemptions. So they will tell you cannot exempt. Others too are on our register. So once you withhold, they don't care. You can withhold whatever. They know it's reflecting on their ledger as tax they are paid. So they don't have it. But the ones who have an issue are those who don't pay tax. They have an issue. So if you have an option with dealing with somebody who is a reputable company for paying taxes to his state, why would you choose somebody who is not reputable and is not paying tax to the state? So that is it's like a balancing situation. As a businessman, you balance.
But it is also difficult to tell them. I mentioned most of my products I buy them from well-known like if we you go there and they won't even sell to you. I'm saying you pay the full amount. You come and say that you are withholding. Please send the product to you.
Let's take a quick one from the online. Run it up. Yes. So back to the basics.
All right.
Isaac is a new consultancy firm. What will be his tax component that he should expect?
Come again, please.
He's
A new consultancy
firm. So he just registered a new consultancy. Okay. What are the tax components that should be expected from him?
We also need to know the nature of the consulting activity, because some activities come with their corresponding taxes. So if you are not engaged in that kind of activity, those taxes does not crystallize for you. So if we know the kind of we know the kind of activity, consulting activities engaging into. So some you may not.
So Engineer Wilfred, we need further and better particulars on this question. So we'll move on to the next one. I expect to hear you give us the nature of your consultancy so that we can get you its appropriate answer. So let's take the final one on this third one. Efficient tax remittance. Can we explore a more efficient process for remitting taxes so that our clients remain compliant and we can easily claim our tax credits?
For now, what we have is a taxpayers portal, it's a GhIE-GRA platform. When you can sit in your bedroom, file your return, and pay your taxes. And there are so many methods of paying the taxes. As soon as you generate your tax bill from a taxpayers portal, you can pay through a bank card, a debit card, credit card, Star222, on all those. So I think these are convenient and efficient enough. But if you have any suggestions, you have a more efficient and more convenient, but you may bring your suggestion, we look at them. But for now, we think that these ones are enough.
Yeah, but
there are times, honestly, you forget to file your pay. There are times in the yes. But if I went to my office, we have credits over 30,000. Yes.
So the system is fair.
Now, somebody calls, you didn't file your VAT incident. I have to pay. I said, I have money with you. And they'll tell me, the law, if I have credit, I'm telling you to pay my tax. That's it. Well, what is this? There are times you forget to file your VAT at the appropriate time. Not that I don't file, but I have credit with you. And yet you want me to go and borrow money to come and pay.
Are you talking about credit with respect to VAT or with respect to maybe income tax?
You have to. It's
Let it
it's
should be clear. It should be clear.
filing and payment are two
No,
different.
filing, I forget to file
Yes.
within the month.
Yes.
And maybe I say, hey, then first or second of the next month, I file. So it tells me you have to pay a penalty.
Yeah.
Okay. What I'm saying is that, okay, I don't have a problem paying a penalty, but I have money with you.
That money you claim when you are filing the subsequent period, you pay less than what you declare because you have credit that will offset your VAT. But the penalty is different from the VAT liability.
No, that's what I want to. I think what you want to know is that then at the end of the month, you're supposed to file maybe 5,000, but you have 30,000 with us sitting with us. You're supposed to pay 5,000, and you didn't file.
I'm supposed to file, even if it's nil.
Okay.
I'm supposed to file.
Okay.
I tend to forget.
Okay.
So I say maybe on the second, I go to my I realize
The credit to pay his penalty. It is the same tax. It can be same.
Okay.
So I'm giving you
Don't write like you want.
No, they're not saying that. You can't take
file next month.
Yes. So because it's that one is tax, and this other one is penalty. So you can use to pay tax liability, but your penalty is we want to penalize you. That is why we will not let you use that to pay.
Okay, so let's take again back to the basics again. From online, then we can move to our fourth point. This one is 2 points, so we should be able to wrap it up. Engineer Franklin is asking, how long will it take to register an entity and issue a tax registration certificate? Yeah, so basically, I think let's focus on GRA, not the information aspect.
Okay.
So just take the GRA component. How long, roughly?
It's when you submit all your required documents correct and you're available for interview, get the information you want, it shouldn't take more than 24 hours.
Take more than 24 hours
Yes.
if all your documentation is right.
And then you're available for interview, research interview. It shouldn't take. You are done. Mostly we do it within a day.
Okay, the quick one on this one. What are the steps to file a zero return? I register a business sole proprietorship, and I've been operating since registration 2017. I want to be in good standing with GRA. What are my steps?
You want to file a zero return. Zero return means there was no activity during the reporting period. So that will be the first model you see when you open your tax portal. When you open that particular return, it tells you if the return for the period is nil, please click here. Just think there. Sorry.
No, he's talking about personal income.
Personal income. Personal income. No, he said VAT.
So let's deal with both cases, whether it's direct tax
all the
or
three
indirect tax.
issues.
So for direct taxes, you will file your return 4 months after the basis period. So if by that time you like you are saying you have not earned any income, the return also comes like that. You file your, I think that one too there's a return nil.
Yeah, no, that one is for annual return. You have to populate 0, 0,
0, 0, 0, 0. But there's not. If there is expenditure, you indicate it. Maybe you paid some wages or salaries, you indicate it. But the revenue, there was no revenue. Indicate it 0, 0, and then you file it. But if it's VAT, there's the first column is if it's nil, take here. So if it's nil, you take that one, then everything goes off. You just come to your declaration.
I want to learn some basic things about accountancy.
Okay.
So they're asking payee, income tax. What's the difference?
All right. So payee is for employees. It is also income tax, but it is paid by employees. If you are not an employee, you don't pay PAYE. It's an income tax. If you are an entity, you pay corporate income tax, which is also an income tax, but that is for entities.
So now let's move to our fourth point.
Or let me say, and if you are also an individual, maybe you are not an employee, but you are running your own business. You are also an individual. You pay what we call PIT, personal income tax. So PAYE, personal income tax, corporate income tax, they are all income tax, but paid by different category of tax.
Let me add something small to what my boss just said, because we had some problems with that. PAYE is a withholding tax. Withholding under Section 114 of the Income Tax Act is withholding by, withholding by employers. Every employer is mandated to withhold taxes from any remuneration that you are paying to an employee. Even if it's a casual employee, you withhold. That is what is called pay as you earn. So for today, employer, it is PAYE, you are withholding. It will come to you, the employee, as your income tax. So if you have employment, maybe outside Ghana, and they are not withholding and paying you the money directly, and you come to pay yourself, you come and pay PIT, you don't come and pay PAYE. So that is how it is. It is a type of income tax, which is withholding tax.
The next point is tax consultants and professional guidelines. Regulation of tax consultants. Is there a need for tax consultants? And are they regulated by the GhIE-GRA? We would like to understand your official position in this.
So let me start this so that they can come in. So the need for tax consultants will depend on the individual. The tax consultant is used by the taxpayer, isn't it? So is there the need for tax consultants? That is from the point of view of the taxpayer. If you think that the nature of the business is such that you cannot do the tax elements of it or the accounting element of it yourself, you may need a consultant. So whether or not a taxpayer needs a consultant will have to come from the taxpayer. But whether or not it is regulated by GhIE-GRA, that is the part that we come in. So currently, we do not have a regulation in place. There is efforts underway for an ally to enable us regulate tax consultants. But as we speak, we do not have that law in place. So tax consultants currently are not regulated by Ghana Revenue Authority. But whether or not there is a need for a tax consultant will depend on the taxpayer.
And
I want to get a difference.
let me also.
LI and law.
Oh, okay.
A law for an ally.
Yeah.
So you meant to say there's a law.
Yes. So that exactly, yes, because Section 19 of the Revenue Administration Act gives authority to the Minister of Finance, to enact an ally to regulate the practice of tax consultants. But that has not been done yet. So that is what I said is still underway, that ally. But there's a base for it in the Act.
Okay. Then this one is to ask professionals here. What is your position on the deductibility of essential business expenses for engineers? Specifically, we want to discuss specialized engineering software, continuous professional development CPD courses, and professional indemnity insurance.
Is your peculiar expenses deductibility. We look at our section 9 of 896. It gives a set of criteria for an expenditure to qualify for deduction. It sets wholly, exclusively, and necessarily. That expenditure you want to incur, is it wholly related to the business, generation of income, or portion of it is domestic consumption, your private goes to your private use? That's wholly. We're talking about the entirety of the amount of expenditure you want to claim as being expenditure. If you wholly incur portion of the income, the business, then necessarily that amount so incurred, would you in the expenditure, couldn't the business have operated? Is it so necessary that you must incur the expenditure for your business to run, before you generate the income? So if it meets these three tests, that amount is granted as a deductible expenditure, wholly, exclusively, and necessarily incurred towards generation of income of the business. Just for expenditure that must bear that kind before we allow it. Once you meet this test, you are free to.
How are you? those three criteria.
Yes, when we're examining your account and the senior expenditure item that is in doubt, we'll this amount, how do you incur it? We want to look at the details. You explain. If
For me to practice as an engineer, I must have a license.
good. So that means it's necessary.
That one is necessary.
It's necessary.
It's necessary.
So if I want to say that the requirements of the license include doing some of these things, the CPD courses.
Yes.
If you don't do them,
And that CPD course, yeah, that falls under reliefs. Reliefs, something you call tax reliefs. An expenditure that you incur, that is not necessarily direct, but it has something to do with your business. It will grant you that amount, and that has a limit. If you incur with the cost of training relief, so you spend that amount towards either developing your skills or acquiring the skills. That does not lead to acquisition of a degree, but rather it relates to a profession, vocation, or technical education. That relief. And then the ceiling, you cannot claim more than 2,000 Ghana cedis in a year of assessment.
I'm sure this one's brief, right?
Okay. So let me ask what my brother just said. The CPD, if we have a relief, personal relief, that if you are an individual, a resident individual, you qualify for relief. And one of them is training, but the law limits it to 2,000. So if you engage in like CPD and it's up to 2,000, or the law will limit it to 2,000, the rest will not be granted. What the relief means that amount of money taken away from your income, that this one, don't tax it. You use it for training, don't tax it. If after that there are any other incomes, tax that one. That is one aspect of it. Then two, deductibility. When it comes to deductibility, if the CPD was 5,000, you can take all the 5,000 as long as they are wholly, exclusively, and necessary for the business.
With me, I think they are only.
If you can, once you can justify that. No, you justify it.
That's
No,
why
not
we
if you did.
have some engagement.
We engage you once you justify it, you get the lamp. That 2,000 to the individual. In the individual. When they are doing their POI, they are filing their returns, they will claim that not you.
Seminar, project management, that is sitting in the 2,000. Don't know.
No,
that one is not for the company.
That one is for the individual. It's for the individual. Yes.
The same individual. He has to do site management. One of it is already put out.
Okay.
So then the rest is that it's already.
And then it's registered with us as an individual. No, once you are an entity, that one becomes a business expense. Once you meet these three tests, you can claim it.
There are two things I mentioned here: relief and deductibility. They are two different things. Yeah, the relief is where it's limited to 2,000. But deductibility, as long as it's wholly exclusive and necessary, you can claim it.
All right, so service versus works. And the GhIE provide a clear administrative guidelines that differentiate between a service for design and supervision and works now for construction. This is crucial for correctly applying VAT and other elements.
This is not so clear because it has bearing on both direct and indirect taxes and then about rates. So unless we get the questions clear, so that we can. Okay.
I said that I am on transportation. For my quotation, you have two basic things: works and then services. Contractors to do drilling for me, and then I will do the. Now, most clients, what I do is that I try to separate the two. But I want quotation that total works and total services. So that if they are applying the coding, they know how to apply the coding appropriately. But in most cases, before you realize, they compute everything. They lump everything together, and then they'll take the 7.5%. But that's not supposed to be the case. Yes, and so that is where this thing is leading to. Because engineering business, you can get one job which has even the services the other works, eh? You can have all those things. But I thought that the way we separate them, the accountants of the client, they should understand so they can apply the appropriate percentages, then you can do your deductions. That is what this question is.
The contract is one contract. That's it.
I can't say contract. Yes.
Or let me say the transaction is one transaction.
Yes. But the transaction, it's itemized such that you can clearly see goods and you can clearly see services.
Okay. Let me read the certain section of our act. The VAT Act 870, section 31. Now, it says services incidental to it says a supply of services incidental to a supply of part of supply of goods.
That's bad.
Yes.
But I'm talking about coding tax.
Good. So let's look at so if you are clear with that, let me move on to subsection 2. Yeah. Despite paragraphs A and C of subsection 1, a supply of real property does not include a supply of service incidental to that supply or the import of service incidental to that supply. It is so if your business falls within the real property, as we are saying over here, the law does not look at service or works or what do you call it, goods. The way you have boxed them into one, we'll deal with it on that level.
One of them is major, the other are also
subsidiary.
Real.
Yeah.
All right, so next one, I think this should be brief. Next startup, while we are with the startup bill, how does the GRA currently define a startup for potential tax concessions? Is it based on turnovers, years in business, or innovation? I think this one just a quick response from me.
It's basically a turnover.
Are we okay with that?
Yes, we're okay with that. So final.
And let me touch a little bit on that. Somebody, I think online asked something on concession that they say there's 3 years concession. Yes. And our brother responded with the young entrepreneur. There are other concessions too in the law, which have been in the Act since 2015, like farming businesses, like agro-processing businesses, like livestock businesses. These have their concessions, some 3 years, some 5 years, some 10 years. They are also there. So if the kind of concession is talking about, if you can be sure the nature of business activity, we can see if you can situate it in any of these concessions. If it is not so, then maybe he knows of something that is now coming, that is yet to come. Then that one, we cannot respond to that unless it comes out.
Yes, I wanted us to finish and then we can look at those questions. Now, our last topic or subtopic, special cases and accounting standard. VAT and levies on delayed payments. What is the GRA's position on the payment of VAT and other levies on fees when the settlement of these fees are delayed by the government? I think
we'll come back to you.
My senior brother have practical examples of that. So if you have a brief comment on that, then we can move to the last thing. We look at online.
I think it's biting almost everybody, but the point is that we need to establish a tax point. One that is tax payment due. Once we attain a tax point.
This contractor, okay, they work for a particular government agency. And you know, government serious, they don't respect the so in terms of contractual payment security. So I think this gentleman or the contractor over a period, GRA just we want to assess your food. And they realize that you've done this project and you have not paid over millions of 30 to a million over a million cities. So then he has to sort of mobilize fund to go and pay this maybe plus other penalties or whatever. And over, I think it was 6-7 years. Now the case came and we were discussing. Then I said, yes, and they're going to have to pay interest on that. And it's so much. I don't think you should get there. And GRA knows very well, most government projects, you have problems with payment. They know, GRA, they know. But anyone who engages in government projects, then they will have issues with cash. So how do we go around this in terms of discussing to say, okay, if the pressure on the GRA will come, but maybe they have to go into his reserve somewhere in his TVs or whatever to come and pay GRA. You know, and I can tell you that if it didn't come to adjudication or arbitration, government will not even pay interest on the money. So we have a problem.
So, okay. Is there a follow-up to what you said? Okay.
Maybe
Sorry, I can't hear you.
okay, the contractor has paid for the money of the
I think people online say they can't hear
you. They can't hear
you. I'm thinking them. Then agree that okay, even though we haven't given GRA the money, credit the business account so that so the way you can work together, the government institutions at that level, instead of chairman of the show. The same thing I have suggested.
Okay, so this question, I think it might come from part surveyors or an accountant. I'm also curious because we always want to get this intent right. Accrual versus cash basis accounting. How should a consultant manage tax payments in an era of accrual accounting standards as opposed to traditional cash basis? A brief comment on that.
All right.
Just look at our online questions.
Okay.
Then we can conclude with it.
All right. So the consultants involved here, I don't know whether the consultant is working as an individual or is working as an entity. But if you are working as an entity, like a company, the Companies Act guides the way the accounts are prepared with the entities. And you are supposed to be on accrual basis. And even the tax law as well also is in line with the accounting standard that entities must prepare their accounts based on accrual basis. Then individuals are on cash basis. So if you are not an individual, you have no business going cash basis. So if you're a consultant, you're a company, you're an entity, you are compulsorily supposed to be doing accrual basis accounting. You can do cash-based accounting, yes. But if you're an entity, you cannot do that. So that's why when our engineer raised an issue of he receiving 3 cedis or 30 cedis, even though he has done something where 10 cedis, he received 3 cedis. I said, no, you have to declare all the 10 cedis. Because it's supposed, if it's an entity, then the accrual basis, even though you have not received all the 10 cedis, it's receivable. So you account for all the 10 cedis. Okay, accrual basis is that if you have a payment to make, the payment that is, I'm going to pick it from payment side and receiving side because it's income and expenditure. You have a payment to make. Are you entitled to make that payment? Has a service been provided or a facility been made available to you? That is why you are now owing that amount of money to pay. If that is the case, it means that legally you are supposed to pay. Whether you have paid or you have not paid, you should count it as part of your expenditure. No, it's expenditure. It's expenditure. But Good. So you add it as part of your expenditure, and then when you go to where you are owing to, you put it there as people you are owing. Now, when it comes to income, maybe you have also performed service for somebody. According to your contract, maybe it's staggered in stages. After 30% completion, you pay this amount. So as the 30% been done, it's been done. But the money has not been paid. But as long as the 30% has been done, the income is receivable. So even though you have not received it, it's receivable. It is something you can go to court and claim. So that is the accrual basis of accounting. And we are saying that the law is saying that for entities, you must compulsory be on accrual basis of accounting.
Okay, so let's quickly take, I think there are 4 questions and comments, 4. So 30 seconds each because we far exceeded our time on our online. So Engineer Linda is asking if she gets your explanation right, the director is to declare tax for himself or herself, declare tax for the employees, and declare tax for the whole company too, right?
Yes, right. Yes, she got us right.
Okay, Francis is saying, why should a company which refuses to withhold tax suffer for penalties when the company can provide all other entities it has done business with to the GRA? I think that's Francis to 30-second comment on that.
So that's one, we are always referring to the law. The law says that you as a, resident company, by law, you are a withholding agent. So as long as the payment you are making is not falling under exemptions, then you are to withhold. So if you don't withhold, it's just like you have added contrary to the law.
Yeah, I think the work for you.
I was coming to talk about these delays, especially with your sector. It affects you a lot. So I'm thinking that when we're looking at coming out with some simplified tax for you, that we're looking at maybe you making proposals to Parliament, and maybe they can consider your sector. You can also add this aspect that has to do with delays in your payment, and the fact that you have to pay the tax. Once it's on accrual basis, you have to pay the tax even though you have not received the money. So that if there is a way government can also make some concessions for you, that maybe if you're a member of Ghana Engineers and whatever Association of Ghana, and you undertake a contract for this, so you are exempted when you have not been paid, you are exempted on this basis. It can be put in the law once you can make your case. It can be put in the law.
Okay,
so that it will not be like every engineer, no, but you might be a member of this association, recognized in Ghana. In good standing, yes, that's the way.
See the way we are, you know that we are.
No, you are willing to do the right thing. Oh, yeah. But only the relatives become a challenge.
Okay, so basically, Francis, in addition, they're also saying we should get conversant with the tax laws. Okay. Most of the issues are addressed by the tax laws. Okay. And then final question, I think he's saying he went to your office in Kumasi. How to get it right? Yes. And he submitted all his documents. The officer in charge was supposed to call him since March or April or so. And now he's not received a call. So, aside that,
which office? If you can get to follow up, maybe we have friends there, you can call somebody to ask to.
Oh. Engineer Len, yes. You want to contribute?
No, I wanted to ask a question.
Yes, kindly unmute yourself and speak to us.
Can you hear me?
Yes.
Okay. My question is not on this point 6. It's on an earlier thing. If I can go ahead. The issue of withholding tax on joint companies. I think the point was made that the joint company or the consortium or whatever we choose to call it may not be incorporated, may not have a TIN, and therefore the tax company or GRA cannot regard it. Yes, can you hear me?
Please start. We are not hearing.
I said with the firms which are acting together, either as a consortium or for example, XYZ and Associates, the tax consultants here said they must be incorporated and they must have a TIN. If they don't have a TIN, the government cannot or GRA cannot recognize them. So if they don't have a TIN and yet have signed a contract with, say, MTN, and MTN is paying them and withholding tax, whose benefit will they put that withholding tax on? If it goes to individuals in that firm, I have no problem. But if it goes to nobody, then they are taxing that. And then when the consortium either folds up or shares its money, then you will tax the same money again. You'd have taken maybe 7.5%. And then when the money is shared, you come and take 7.5% from each sub-company, which means you end up taking 15% or more. That is unfair. Hello?
Yes,
you
we
can hear
are
me?
here.
Yes.
I think we've mentioned clearly that withholding is a tax. You are paying tax. And for now, anybody who pays tax without a TIN, I don't know how GRA will account for it. Because you're now online and your address is your TIN. So if you don't have an address, where do we locate the money?
That's even your account number. For example, if the MTN example, if MTN claims you have with 7.5, so the members of the consortium, when you check your individual ledgers, on whose ledger that payment reflected?
That is my point.
It must reflect in somebody's ledger.
Or
you can even see that payment in your taxpayers portal. So if you're able to determine who received that withholding from MTN, that will help. But now the system is live. As soon as the exact and pay, you see it. So on whose TIN?
Yeah.
There's the account
So
number.
if they
Was
don't
that
have
payment credited?
If they don't have a TIN for the consortium, should they not be told to keep that money and then let the individual firms rather suffer the withholding
Between you and MTN, for example.
So if in that case, MTN will have to pay the members in the joint venture individually. There's no problem.
Okay, thank you.
Who receives the credit?
Yes, and the system cannot generate certificate for if you don't have a TIN.
Who receives the credit?
Even though you have come together, but you are maintaining your individual identities, but you are just together for a common project. So my understanding is that if MTN example, if MTN is paying.
I will not be credible. I don't have the thing.
No, you have your team.
You have your team.
You are maintaining. So
that means all of you support.
By that, each of you will know how much benefit he's supposed to get from the total bulk of money. So it will be paid to you individually.
Even though you have come together to do the money that comes to you, you are equally.
No, but you have agreed on how to share that money.
What is happening? The client has withheld certain amounts of their payment.
Yes.
But because the consortium doesn't have a TIN, that money is not being paid to GRA.
No, but
anybody's name. It is taken from him, but it is not paid. That is the relevance.
Fine. Fine, but the group knows how much benefit they are expecting from that money. So the percentage Is it a problem again?
So, I said that, are you not interested in finding money that's been deducted in your name
But has not been paid. That is the if the money is put into GhIE-GRA account, you will not benefit. They will ask you to come and pay another tax. So that is where the agreement should provide how much benefit you are getting from that bulk money, so that it will be given to you individually. And
maybe diplomatically, you can tell, for example, MTN, for example.
Yeah. The grants, that sometimes writing the thing to your grant, you can make a mistake.
yes,
It has happened to me. I made the mistake. And the client, GRA is supposed to at least alert the client that, oh, this particular thing is wrong. So maybe tell the beneficiary to come, and they don't do it. It will be there. They will just put it somewhere. I mean, GRA. They will pay the client, will pay the money to GRA. GRA will not alert the client, oh, maybe this particular or this particular the team number is wrong. So the money will be somewhere. It happened to me. I can talk with God. It happened. I wasn't getting the
credit, yeah.
I had to go and fix my tax office. I need to go to the head office. It was when I went to the head office. I mean, this one is going to, I mentioned the market here of the calendar. He went to start.
The 10.
Strong. I've been told even and the thing about it. So I had to, and I could not correct it directly. So I had to write to the grant, and then I would then have to write to GRA to correct the TIN number. And before the correction was this one is not the TIN number, you can't have the attention of the grant. Oh, this person TIN number. But the money was sitting there. It was not credited to me. So I think this is some of the things that you have to for them at GRA. But it was credited to me.
Can I ask a related question, please?
A follow-up. Okay.
Yeah, the example was given also of a situation where it's not a partnership, but firms come together so that, let's say, the lead consultant, there's withholding tax taken by the client. Again, let me say MTN. Let's say I'm the lead consultant. So they take 7.5% of the money out. Now I'm sharing it between 6 parties in different percentages. If I share the remainder after taking out the 7.5, it means each of those individual firms is losing a portion of their money, and it's not in their name, it's in my name alone. Then when I'm paying them, I'm also obliged to take withholding tax, which means their money is reduced by the first withholding tax, which applies to me, and I get benefit. And there's a second withholding tax, which I impose on them. Is that not out of order? Should it not be possible for me to tell IRS or GRA, that the withholding tax, which is in my name and in my TIN, please subdivide it among my brothers, let me put it that way, in these percentages, so that I don't have to take another withholding tax from them, because we are a team, but every team must have a leader. Can the money paid on my behalf be reallocated? Because we face that situation all the time. A lead consultant can be taxed so much if his share of the actual business is 20%. By the time they've taxed 7.5% of the 100%, it means half of his money is gone into withholding tax. And he has to wait for a year before he accounts for it. And then he'll try and pass it on to the others. And then they also will suffer twice. Thank you.
But one beautiful thing about it is, all of this, no tax is lost. It's your money. When you file a return at the end of the year, you can get it. But I think we mentioned earlier on that the withholding tax is part of the tax you are supposed to pay. So the one you are paying the money to, is it expected by law to pay tax? The subcontractor. So if it's expected by law to pay tax, in this case, it's any income. And the law is saying that when you are making payment, then withhold something. and let's credit him with it, so that when at the end of the year he's filing return, that credit there will be there to take care of part of his tax. So if he's earning income, why is that when he's suffering tax it becomes an issue?
Hello, Chief. I agree with you that, for example, the lead consultant, let me take it that as me. The withholding tax, even if it's a big cut of my money, it's withholding tax. But here's again a situation. I hope I don't forget my point. I'm getting old. My first point is that after taking 7.5% of his portion of the whole, which may be a substantial portion of his share, at the end of the year, even if he's able to prove to you that by so doing, all the withholding taxes he's paid amounts to more than he should pay as tax for the year, instead of giving him the money back, you tell him it's credit. In the next year, he will suffer the same effect. So you keep on piling up credit for him when he doesn't have money to pay salaries, for example. That is one problem. The second problem is that when this lead consultant is charged a big chunk of his share, the other individuals that he in turn charges, they get the benefit of the small charges that is given to them, but they don't get a benefit from the big one that is taken from the main consultant. That's why I was asking whether the main consultant's withholding tax can be reallocated when he himself comes to say, we received this money, I'm the main consultant, so I got 150,000 in withholding tax. I want it shared in these percentages for these companies, and they are in agreement. And I present my documents where we agreed on so much percent. Can it be reallocated? Because that would solve the problem.
Thank you.
Yes, I think it can be done right from source. When the client is paying that big chunk, then you supply the team of all those members in the group that this amount is being allocated to this number of things in your withholding tax schedule. Your client, when he's paying, then each party will receive what is allocated to them from source, not before you get to GRA.
I'm thinking of the situation where it has gotten to GRA, because when a firm, a big firm like, well, any big firm in this country picks 4 others to work with it, and the people are happily working with him, but the payments are being made to the principal or main partner for him to share among his people, the client invariably won't accept breaking up the tax before it gets to GRA. That's why I'm asking whether GRA should not accept, if we can produce a contract within ourselves that says that A is getting 20%, B is getting 15%, and so on. Shouldn't GRA be able to reallocate what it has received? It's in your coffers. Thank you.
Thank you very much.
All right, so let's take our last question for the day.
Because we are 4, it's not to the principal. They take it between the time. I'm supposed to give me my money. Can't you do that like pay me a salary?
That's if you're an employee.
You don't pay a company salary.
That's if you're an employee.
Yes, if that's what you do, that's right.
I went as a consultant. To avoid this double thing there,
but even if you're an employee, you still suffer withholding. That's fine.
If I end, then I have to pay my tax on it.
No, you'll be withheld.
No, if
he takes you as an employee, the law enjoins him as employer to withhold. So you still suffer withholding.
It's a big issue.
Anyway, let's time is fast spent. Engineer Matego, your hand was up. Let's hear you. Okay.
Yes,
So,
the question I was going to ask, someone else has asked it, but I'm not satisfied with the results from the response from GRA, because in the past you could write a letter to say that this withholding tax certificate should be split among maybe these 4 companies. Why can we not do that anymore?
I don't know which the period you're talking about, but the laws have also changed. So since this law was 2015, Act 896, 2015, before then we had 592, Internal Revenue Act 592. That has certain provisions which are no more in this provision, in this new act. So if the jurisdiction is the time frame is that it affects the old act, you may be right in that, but with the new act, if it's not in there, we can apply it.
Let's satisfy Franklin there.
Documents there. We can give them a reminder. What is the name?
I think we can take that after the program.
Yeah, after that, let's take the details.
And finally, our engineers are asking for special dispensation. If possible, we can get your contact after our program. So, of course, we know we have to go through the office, but for you being our resource people today. On this note, I'll invite our chairman for the structure subgroup to give us a brief closing remark. Then we close for the session.
So we want to thank
GhIE-GRA resource persons for coming with their appointments who make it available for us to come and enrich our knowledge on the taxes. We know we are not yet satisfied with everything. We'll go back there. This is the second time. No law tells
Let me say something to laugh and see whether it can help resolve this matter. Because I think the first time we came up. You see, when there is the law on withholding is on a contract, and the contract is between the withholdee and the withholding agent. If you are not party to this, you can't benefit. So the lead contractor is the withholdee. The person who's the client is the withholding agent. The subcontractor that is not in this picture again. So that is it. It's a legal position. Unless the legal position changes to recognize the subcontractor, it is between the withholding agent and the withholdee.
If it doesn't have a contract with you, so they cannot provide.
No, but it's making payment. The law says when it's making payments.
Short.
Wow.
Come we have from morning to evening session. You can get a lot out of it. We thank also our colleagues and all the officials who were part online here in the hall for coming. And we hope that if you have some other questions, we can bring them out and then we can get hearing to help us in understanding it. Thank you very much for coming. All right, to our online participants, one person should volunteer to give us a closing prayer, and we have 30 seconds to do, otherwise I'll be forced to ask you to volunteer.
Okay, I'll do that.
Excellent.
Our Lord and our God, we want to thank you for this time we've had with our tax authorities, the GhIE-GRA. We thank you for the contributions they've made and the understanding they've given. We pray that where they know the law is not fair, they may go back and try and get the law adjusted from their end, whilst we also work from our end to try and change things, because it is very difficult to get the ear of Parliament. We pray that suggestions they've had before in earlier such tax seminars may also be taken on board by all of us. And at the end of the day, the government will make tax fairly to your glory. In Jesus' name, amen.
Amen.
Practical prayer.
Practical. Thank you very much. I used to not to like taxmen, but I think you guys are different.
Oh, you have offended your
I like the prayer. I like the prayer. Oh, but the door. Oh, yes, sir. Yes, sir. Yes, sir. I really very seriously.
Yes, sir. Thank you, sir. Your God is from. Oh no, I've meditated the prayer. Oh, praise. Yes, sir.